We have with us Shri Rajneesh Karnatak, MD and CEO, Shri P.R. Rajagopal, Executive Director, Shri M. Karthikeyan, Executive Director, Shri Subrat Kumar, Executive Director, Shri Rajiv Mishra, Executive Director, and Shri B. Kumar, CFO of the bank. We have placed all microphones on mute. At the end, during the Q&A session, we will be sending your request to unmute yourself in order to ask questions. I will take you through this process before the Q&A session. However, the management will continue to remain unmuted throughout the session. I would now request Shri Rajneesh Karnatak to address this gathering. Over to you, sir.
Thank you, Kejal ji. So good evening to all members of the press and electronic media. Ladies and gentlemen, it is my pleasure to welcome you all for today's interaction and share with you the financial results of the bank for Q2 FY25. The strong macroeconomic and fiscal indicators of the Indian economy, coupled with improved investment, controlled inflation, comfortable foreign exchange reserves, exhibitive positive sentiments and stability, preparing the ground for India to become the world's third largest economy by 2027 and a developed nation by 2047. Against this backdrop, the bank is playing a pivotal role in fueling the country's growth trajectory. The YOY credit growth of our bank was 14.51%. The major drivers of growth will be consumer-centric innovation along with strong commitment on sustainability. The fulcrum of these innovations will be enhanced customer experience, leading to more low-cost deposit mobilization through retail deposits and fund the credit growth. Asset quality will be given paramount importance with improving underwriting standards, containment of slippages and speedy recovery. In this direction, a few new initiatives are taken. First, I will discuss about the business initiatives. Number one, the new credit assessment model based on data available from digital footprints has been finalized and a product named Star DigiBiz is developed to be rolled out digitally with an amount of up to Rs 100 lakhs. Number two, the new internal rating model developed by CRISIL has been introduced for rating investment instruments. Number three, launched virtual account system payment service for assigning virtual IFSC code for corporate clients, which will enable faster collection of their payments with automated reconciliation. Number four, new BOI Tata Commercial Vehicle Loan launched in collaboration with Tata Motor Finance Limited. Number five, the maximum limit per member and group under the Star JLG scheme increased from Rs 50,000 to Rs 1 lakh and Rs 5 lakh to Rs 10 lakh respectively. Number six, the CGT SME claim process and adjustment of the claim money received has been centralized now. The other part is with respect to the IT initiatives. Number one, with focus on digital and technical transformation, Project TechSnet has been launched to scale up digital footprints. Number two, Project Aditya, analytics-driven insights to yield actions, has been launched for developing robust technological platform and enhancing the data quality and governance. Number three, to enable outward remittances in 100 plus currencies and inward remittances in 30 plus currencies, a multi-currency payment solution MCPS has been introduced in the bank. Number four, OTP-based mandate facility has been implemented which customers can authorize auto debits from their accounts to corporates without using the third-party platforms. We have published and shared the financial results of the bank for Q2 FY25 today, that is 11th November 2024. The main highlights of which are as under. First, I go through the business part. Number one, global business increased by 12.05% YOY from 12,46,000 crores in September 23 to 13,97,000 crores in September 24 with an incremental growth of nearly 1,50,000 crores. Global gross advances increased by 14.51% YOY from Rs 5,43,000 crores in September 23 to 6,21,000 crores in September 24 with an incremental growth of nearly 78,000 crores. CASA increased by 7.26% YOY from 2,56,000 crores in September 23 to 2,75,000 crores in September 24 with an incremental growth of 18,000 crore plus and CASA ratio stood at 41.18%. Domestic gross advances increased by 15.03% YOY from 4,52,000 crores in September 23 to 5,20,000 crores in September 24, with an incremental growth of 68,000 crore plus. Sequentially, it has grown by 12,000 crore plus at a rate of 2.46%. Domestic deposits increased by 12.33% YOY from 5,98,000 crores in September 23 to rupees 6,72,000 crores in September 24, with an incremental growth of 73,000 crore plus. Sequentially, it has grown by rupees 24,000 crores at 3.83%. RAM advances of the bank increased by 19.74% YOY from rupees 2,50,000 crores in September 23 to 3 lakh crore plus in September 24, with an incremental growth of 49,000 crore plus, with a 57.70% share on the overall credit book of the bank. As regards the profitability and the asset quality is concerned, operating profit of the bank stands in Q2 at 4,147 crores, witnessing a YOY growth of 10%. Net profit for Q2 stands at 2,374 crores, witnessing a YOY growth of 63% and H1 growth of nearly 35% with a figure of 4,076 crores. Global NIM stood at 2.82% and domestic NIM stood at 3.14% for the Q2 of this financial year. Interest income for Q2 FY25 stands at 17,355 crores, witnessing a YOY growth of 16% and a half-yearly growth of 17% with a figure at 34,293 crores. As regards non-interest income for Q2, it stood at 2,518 crores, witnessing a YOY growth of nearly 49% and a half-yearly growth of 21% and stood at 3,820 crores. There has been improvement in the asset quality with reduction in both gross NPA and net NPA ratio of the bank. The gross NPA ratio is at 4.41%, improved by 143 basis point YOY for Q2 of this financial year. As regards the net NPA ratio, it stood at 0.94% and it has improved by 60 basis point on a YOY basis. In tune with growth of the economy, the guidance for domestic credit growth will be around 14% and domestic deposit growth is projected at around 13% for FY25. The key focus area will be low-cost deposit mobilization for protecting our NIM and increasing high-yielding advances for consistent growth in business, with emphasis on digital initiatives, improvement in asset quality, and arresting slippages. The endeavor of the bank will be increasing efficiency and profitability along with focus on compliance and better corporate governance. I would like to thank you all for showing faith in us and your continued support. The floor is now open for discussion and question and answers. Thank you so much.
Thank you, sir. We would now open this press meet with a brief Q&A. Participants, you will notice a small icon on your screen, a hand sign. Once you press this, it will alert us that you would like to ask a question. We will go around one by one. The journalist asking the question will be unmuted. You will get a notification on your screen to unmute yourself. Kindly click on unmute and identify yourself and the publication before asking the question. For those who have joined us on audio call, request you to kindly WhatsApp my colleague Memuna or Gauri from AdFactors PR team if you would like to ask a question. We will ensure that the questions are taken. Allow a moment for the queue. The first request is from the line of Mr. Abhijit Lele. Sir, you may unmute yourself and proceed.
Am I audible?
Yes, sir. Go ahead, sir.
Good afternoon. Your net profits are completely seem to be driven by the other income, the treasury operations. How would you comment on the main part of the net interest margins, net interest income, which and the NIMs which have been in pressure? So is it coming from because your bulk share of the bulk deposits have gone up? And what would be the guidance in terms of NIMs?
Yeah, thank you so much, Leleji. As you rightly observed that there is some pressure on the NIM side. So if we clarify over here that the NIM is 2.82 on a YOY basis for 30th September, it is 2.82. However, if you see the domestic NIM is even better at 3.14%. If you see the other banks also, whichever bank is having significant presence in the international market, if you see our balance sheet, our 15% of the global business is on the international business side, where the NIMs are on a lower side. So that is because of which the overall global NIM gets compressed for the banks which have substantial international business. That is why this figure is coming at 2.82 for our bank. Otherwise, the domestic NIM is at a healthy number of 3.14%. We have shown also in our slide in detail in slide number 21 that the international NIM is at 1.17%, because of which the overall NIM is coming down. Yes, we have shown improved non-interest income. In fact, the non-interest income has increased by 49% to 2,518%, and it is riding on the fact that there has been recovery in the return of accounts with 685 crores, and also from the treasury investments where the income is coming to the extent of 730 crores. In fact, the compression in the interest income is also due to the fact the RBI circular that the penal interest which earlier we used to book in the interest income only is now booked under the non-interest income. So that income has gone towards the non-interest income. That is why there is some elevation in the overall non-interest income, wherein on a YOY basis in September 23 the non-interest income was 1688 crores, which has now increased to 2518 crores. On a H1 half-yearly basis also on a YOY basis, for H1 of September 23 it was 3100 crore, and now it has improved to 3820 crores with a growth of 21%. So interest income definitely has grown by 16%. If you see, the advances income has also grown by 14%, but however the deposit expenditure has gone up, and it has gone up by 22%. As regards the bulk deposits are concerned, if you see our presentation also, the bulk deposit is only 14% of our overall domestic deposits, which means that 86% of our domestic deposit is retail deposits, which is driven by CASAs and the retail term deposits. So we are very much confident that in the coming 2 quarters, in December and the month of March 25 also, our NIM would remain, it is presently at 2.80%, but definitely by the end of the year, it should be at around 2.90% on a global basis.
Okay, for now I have consumed. I will come back in line.
Thank you, sir. Sir, next question is from the line of Mr. Joel Rubello from Economic Times. Joel, I've unmuted you. Kindly proceed.
Hello.
Yes, Joel.
Yeah, can you hear me?
Yeah, we can hear.
Yeah, sorry, your volume is not coming very clearly. Can you hear me now, sir?
Yeah, we can hear you, Joel. Go ahead.
Suddenly your volume has dropped, sir. It was okay.
Can you hear me now?
Very feeble, but I'll try if you can hear me. Sir, just to clarify, you said you expect your NIMs to improve to 2.9%, and for the rest of the year. Why do you expect that? What is driving that expectation?
Actually, to tell you more granular, our net interest income, if you see, it has increased by interest income has increased by 16%, within which the advances income has increased by 14%. So what has happened in this quarter, it is an aberration. There have been nearly 18 to 20,000 crore of corporate advances which got paid off in the month of July 2024. What happened because of that, this interest income on this 18,000 crore was not available during the entire quarter, and the credit growth happened over a period of time in the month of August and September. That was the basic reason for that. But now the disbursements have picked up and the busy season now been coming. We are expecting that there will be a continuous average increase in the advances, and with this average increase in advances, December quarter and March quarter.
Hello.
In fact, now we have been following up with our field on the average advances budget, number one, and also on the disbursal part. So both these factors will contribute to a higher interest income on the advances side, resulting in a better net interest income in the ensuing 2 quarters.
Sorry, sir, I can't seem to hear you at all. It just become worse. I will try again. I will go behind the queue. I'll try again. Thank you.
Sure, Joel. It would be good if you could find a clear spot with a better network. We'll proceed
Can you
with
hear?
Sir Joel will join us back. In the meanwhile, we'll proceed with the next queue. Sir, next in line is Mr. Mayur Shetty from Times of India. Mayur, I have sent a request. Could you unmute yourself and proceed?
Gap between deposits and advances, which seems to have widened this quarter. I wanted to know what you all are planning to do about it, because your branches are also not expanding. So,
Mayur,
yes,
can you
sir.
hear me?
Yes, I can.
Mayur, can you repeat your question? Actually, you are audible in between of your conversation.
I was asking about the gap between the deposits and the advances. It seems to have widened this quarter. So, what are you going to do about to cover the gap?
Yes, yes. So if you see our quarter-on-quarter deposit growth was around 10,000 crores and our global advances growth was around 21,000 crores. So there was a gap of 11,000 crore. On a YOY basis also incrementally, our deposit grew by 71,000 crores and our advances grew by 78,000 crore. However, we have a cushion available adequately because we have SLR to the extent of nearly 40,000 crore. Apart from that, we have taken refinance also, and then we have taken CDs also from the market. Then Tier 2 bonds also of 2,500 crores we had garnered during this quarter, and infra bonds also of 5,000 crores we had garnered. So all these things put together, we were able to garner enough resources to fund the credit growth. That is why one of the reason is that if you see our CD ratio is also at around 80% on the domestic side. But however, we have other resources available to fund the credit growth in the system.
But going forward, do you have any plans for the liability side, the retail deposits?
Yeah, very much. We have good planning for the resources side as far as this is concerned. So we have set ourselves a
Participants, allow us a moment. We are just figuring out the technical glitch.
Are you able to hear me?
Yeah, we can hear. Yeah, you can hear me, Mayur?
I lost you when you were speaking about the retail deposit mobilization plans.
Yeah. So on the retail mobilization part, we are saying that the top management has already chalked out a strategy wherein the number one is that we have now posted 82 specialized officers for raising resources in our 69 zones and 13 FGM offices. Number two being that we have identified 1,000 branches in the bank for dealing with the HNI customers who have good balances in our CASA accounts. Number three is we have also decided to open around 200 plus branches in this financial year, out of which 36 branches already we have opened, and most of these branches are coming in the semi-urban areas where we anticipate we will get good resources from CASA and also from the retail term deposit. And fourth is that we have also renovated some of our CASA products in tune with the market. Another thing is that we have also launched few new products in the CASA segments with new benefits like personal insurance, accidental insurance, fire insurance in case of current accounts, and other credit cards and other kinds of things to attract new customers under the CASA backdrop. And the last thing being that we have also had tie-ups with hospitals and education institute, PSUs and government departments and also corporates for getting more bulk salary accounts for such kind of things so that we get more CASA and more retail term deposits. And we are also going big on the digital banking side, both on raising of opening of saving accounts, opening of current accounts, and also retail term deposits through the digital channel and the mobile and the internet banking channels. So all these things taken together, we are very sure that with the kind of digital points that we have and the customer outlet points that we have in the bank, definitely we will be doing better in raising resources. In fact, if you see one of our slides, which is on the total touch points with the customer touch points that we are having. So we were having around 34,683 touch points as on June, which has now increased to 35,995 touch points, which is there on slide number 41. In fact, our touch points have increased by 1,312 crores in 1,312 number in this quarter alone, with 36 new branches, and out of which 27 being in semi-urban areas. And then we have also number of BCs, 1,275 additional BCs that we have now taken during this quarter, which will all help us enable to mobilize more CASA and better our CASA ratio will also improve, and the overall incremental increase in CASA ratio will be there for the bank.
Thank you, sir. Thank you.
Thank you, sir. So Joel is back at a better network. I'll take him again. Joel, could you unmute yourself and proceed, please?
Can you hear me now?
Yes.
Yeah, Joel, I can hear you.
Thank you so much. Sir, a couple of clarifications before I come to the NIM question. Your PA provisions on a whole have increased year on year, slightly higher also quarter on quarter. Is there anything that your was that
provision has increased quarter on quarter basis? Is there any major account?
Yes, Joel, see, in this provision, the incremental increase in provision is because of the one lumpy NPA which has happened during the quarter. It is a PSU NPA which has happened, because of which we had to make a provision. That is because of that, and there is also some provision with respect to the aging in NPA accounts, and also some unsecured portion in the NPA account. So all taken together, this provision has increased as far as the NPA is concerned.
We have front loaded the.
How much is the, yeah, sorry, please go. Sorry.
Yeah. Joel, we have front loaded the provision, aging provision this time.
Okay.
Next quarter provision front loaded.
So is it all done basically? On the provision, how much you will have to still go on the aging provision?
You are not clear. Can you come clear?
No, it is done. Yes, Joel, it is done for respect of the lumpy account. The provision is as per the RBI guideline. Whatever is the RBI guideline provision, full amount has been provided for.
Out of the new provisions this quarter, how much was for the PSU NPA?
How much was for the
PSU NPA that is
PSU? That was around 200 crores.
Okay. Sir, my next clarification is your tax expense has also come down year on half actually. Is there any reason for it?
Because of new tax regime.
Yeah, our Kumar CFO is answering this question, Joel.
Tax expenses we have worked out 25% only normal course, because we have migrated new tax regime since September 23 onwards. But in September 23 we have to make additional provisioning because of one-time impact on migration to new tax regime. Because of that, at the time you can see the tax provision was more. But this time, since we have migrated from September 23 onwards, and now December onwards, if you can see, our tax provision is around 25% as per the new tax regime. So this is the reason. Quarter YY comparison.
Yes. Sir, I couldn't hear the NIM question. Said that NIM will improve by the year end to 2.9%. What are the reasons you think NIM?
So I was trying to explain this thing only, Joel, that the net interest income, if you see, it has, you are rightly said that the improvement has not been much, but the reason I was explaining was that around 18 to 20,000 crore of our corporate advances got paid off in the first week of July 24 itself. So what happened was that around 18 to 20,000 crore of advances, the interest income was not there for the bank. And the credit growth has happened, but it has happened over the quarter. So the credit growth mostly happened during the month of August and September. So the entire quarterly interest income of 90 days was not available to the bank. So now what we have done is, now we are monitoring not only the growth of advances, but also the advances on the average advances side. So this is what the target we have driven to the field, that the average advances on a weekly basis should grow at the field level, number one. And number two, we are also monitoring now the disbursements at the field level. So what kind of disbursements on a weekly basis is now happening at the zone and the FGM level. So with these two things we have adopted, we are sure that in this quarter and the ensuing quarter of Q4, the interest income will be even better, and that will contribute to the improvement in the net interest margin. And we anticipate that in fact, we give a guidance that our NIM should be, global NIM should be at around 2.90%. As on March 25.
one last question, sir. What is the outlook for loan growth?
Come again, sir.
Joel, we lost you. You mentioned what is the output for?
Joel, you are not clear actually. We can't hear you properly. Can someone repeat the question?
So we will get back to Joel and try to get his question over a text or a chat. Joel, your voice is not clear. In the meanwhile, we'll continue with a question we've received from Ms. Gayatri Nayak from Economic Times in a chat box. Her question is, what is the value of the home loan portfolio and the share of priority sector housing loans? In continuation, also the question is, what is the value, why is the share of priority sector home loan falling?
Yeah, okay. So as regards the home loan is concerned, we have a book of around 63,000 crores in September 24, which has a growth of around 17%. If you see the total retail book of 1,21,000 crores as on September 24, our home loan book is around 52% of the overall retail book. As regards the priority sector advances are at a healthy number of 46.13% as against the mandatory regulatory number of 40%. Within the housing loan numbers also, priority sector housing loan also, the number is improving. So there is no concern as regards to that also.
Thank you, sir. I hope, Gayatri ma'am, that clarifies. Sir, we've received a question from Ms. Shipra from Informist. Her question is, the fresh slippage, the fresh slippages have gone up on year as well as on quarter. What are these mainly coming from? And also any fundraising plans for the rest of the financial year?
Yeah. So as regards the fresh slippages are concerned, so the total fresh slippages was 1,930 crores in June 24, which has increased to 2,046 crore as in slide number 24 in this quarter. So this increase is because of one lumpy account in the public sector segment, in the telecom segment, which has happened. That is around 1,000 crores for us, because of which the increase is there. If you remove that one single account of 1,000 crore, our slippage from the entire book, other global book, is only 1,500 crores. So that is the reason why the overall addition has happened as far as the slippage is concerned on this. And if you see the slippage ratio also, the slippage ratio is 0.44 during the quarter. And if you net that telecom account, our slippage is only 0.27%. And the credit cost also has gone up because of that only at 0.97% for this quarter. If not because of that public sector account, the credit cost also would have been down at around 0.77%. As regards the capital raising plan, so our CRAR is quite comfortable at 16.63% as against the regulatory requirement of 11.5%. And we have already raised the capital in December 2023. In this financial year, presently we do not have any plan for raising any fresh capital, nor do we have any board approval for that. What we will be raising is a Tier 1 bond of around 2,500 crore in this the second half year. And also we will be raising around 5,000 crore of infra bonds during this half year, the second half year of this financial year.
Thank you, sir. Next question we'll take from the line of Mr. Laltendu Mishra from Hindu. Sir, kindly proceed.
What is the average housing loan, if you can tell me? What is the average ticket size?
Average ticket size would be around 30 lakhs. Should be around 30 lakhs average.
Okay. Thank you so much.
Thank you, sir. Sir, we have a comment question from Ashish PTI as well as Mayur Shetty from Times of India in the chat box. The question is, how much is the exposure to the PSU account? Which sector is it from? And what is your outlook on recovery there?
Okay. So as regards the PSU account is concerned, there is only one account of the PSU which has slipped for us. It is, as I told, that it is around 1,000 crores. It's in the telecom sector. And as regards the recovery in that account is concerned, we are already in talks with that the management of that public sector. Other banks are also there in that account, and definitely some working is happening on the resolution and restructuring of that account. And as regards the provision is concerned, we have already made the provision as per the RBI guidelines. Whatever is required has been made in this quarter.
Thank you, sir. Sir, next question is from the line of Mr. Ram Kumar from Hindu Business Line. Over to you, sir. Ram Kumar, sir, you may unmute yourself and proceed.
Sir, given your experience of credit and deposit growth in the first half, have you actually recalibrated your deposit and credit growth for the second half or for the full financial year?
Yeah, we have done some recalibration basis the kind of growth and the numbers that we are seeing. So what we are saying on the global side, our credit growth will be at around 14% and deposit growth will be 13%. Though the deposit growth that we are giving a guidance is less than the credit growth, that is at the backdrop what I said earlier also, that we have certain resources which are beyond the deposit resources, like extra SLR we are having, then CDs we are raising, then we will be also raising, already we have raised 5,000 crore of infra bonds, another 5,000 crore we will be raising, another 2,500 crore of tier 1 we will be raising, and some refinance also we will be doing. So all these things taken together will be supporting the credit growth and the resources will be coming out of that. As regards the 14% of the growth in the credit is concerned, so the economy is growing at around good pace of around 6 to 7%. Traditionally, we have seen that the credit grows 2 times of the GDP growth which is happening. So if the GDP is growing at 6 to 7%, it is safe to assume that the credit growth will also be at around 14%, that we are anticipating and giving a guidance for our bank also. As of today also, if we see the pipeline, we have a pipeline of nearly 70,000 crores in the bank with respect to corporate credit, RAM and international advances. That is more than 10% of our global credit book. So we are very confident that the overall credit growth will be 14% for the bank for FY25.
So at the beginning of the year also the target was the same, 14% of credit growth and 13% of deposit growth. Was it that?
Correct.
Okay. And one more thing, sir. You said that you have let go of 18,000 crore worth of corporate advances actually. Okay. So where have they? I mean to say, you could have retained some of them at least. Is there any kind of competitive pressure, or you said that you thought that these are too high cost, low cost advances which you have let them go? What exactly is the scene actually there?
Yeah. They were very finely priced with the kind of growth in deposit cost which was happening. To retain those advances were not advisable for the overall profitability of the bank. That is why we have let them go in the first quarter of the July itself. So that was the simple reason. It was only pure commercial decision which we had taken.
Okay, so in the next half, what kind of corporate credit offtake do you see actually? Yeah.
So as I said that we are having a pipeline of nearly 70,000 crore plus, which is more than 10%, in which as I say, Ram, we will be having roads and ports. We are having proposals. We have proposals in the pipeline of oil sector, petrochemicals and petroleum, power sector. In renewables, we are having in both solar and wind and also hydel also. And then iron and steel, few proposals are there. Solar PV modules are there. Pharma is there. Textile is there. And then also chemicals, ethanol also proposals are there. Warehousing proposals are there. Data center is there. And also automobile. So all these taken together, we are very comfortable in the corporate credit advances also, and we are very much confident that whatever the credit number that we have given, 14% YOY growth, will be able to achieve.
And but last question, sir, do you think 80% CD ratio is a bit high? You need to moderate it a little bit?
So as regards the RBI guideline also is concerned, statutory requirement CRR and SLR 77.5% we need to keep. So if you see private bank and other banks, their CD ratio is even higher. So our CD ratio is quite modest in that manner. And then as I said that we have other resources to our side through which we can raise resources and support the credit growth which is there. So there is no concern as regards the CD ratio of 80% is concerned.
Thank you so much, sir.
Thank you, sir. So next question we'll take from the chat box, which we've received from Ms. Shubhana Sheikh from NDTV Profit. Her question is, what is your view on corporate credit? How is the pipeline looking like? Can you share the amount of loans in your corporate pipeline? And where are you seeing the demand coming from? Over to you, sir.
I think I have explained this question in detail, both in amount wise and the sector wise through which this is coming. So it is sector agnostic. We will be getting corporate growth in corporate sector, in international advances also, and also on the RAM segment. And the sectors which we will be contributing, I have already explained in detail, I think.
Thank you, sir. So next question we've received from Mr. Manish Suvarna from Money Control. His question is, why is SMA2 loans have gone up sharply in this quarter?
Yeah, as regards SMA is concerned, so you can see over there is that our, in fact, SMA has come down. If you compare on a quarter-on-quarter basis, in June 24, our SMA was 9,600 crores, which has now come down to 7,600 crores. So it is a reduction of nearly 2,000 crores. This is there on slide 23 of our presentation. So if you see the overall SMA percentage to the standard book of the bank, it is only 1.29%, which was 1.69% in the previous quarter. So in fact, the SMA number has gone down significantly by nearly 2,000 crores. But if you see in the agriculture, it has from the last quarter it has come down. In retail also it has come down from the last quarter. In MSME also it has come down in the last quarter, and corporate also it has come down in the last quarter. So the bulky number which is happening among the sector-wise classification is in the corporate only, and this consists of 3 or 4 public sector accounts, state public sector accounts of one state, which are coming under the SMA category. Otherwise, the overall SMA portfolio is quite within control, and if you remove that public sector state enterprise, the overall SMA number would be even less than 1% of the total standard advances.
Thank you, sir. Abhijit sir and Shubhana, I yet see your hands raised. I would unmute yourself. Let us know if you would like to ask a question. Okay. So we've just received a follow-up question from Manish. His question is, so that account is guaranteed by government, and which is in SMA2 loan?
Yeah, SMA2 loan, there are 3-4 advances which are in SMA1 and SMA2. So a couple of them are guaranteed by governments, a couple of them are backed by securities, cash security and tangible security.
Thank you, sir. I hope, Manish, that answers your question. So with this, as I see there are no further questions, I would like to now hand over the final mic. I would like to hand over the mic to Shri Rajneesh Karnatak for closing comments. Over to you, sir.
Thank you so much, Kejal, for having the entire top management over here, and for all the press people here. Thank you so much for joining. And on behalf of the top management, we assure that in the ensuing quarters also of December and March, we will be giving good results for the bank and coming back to you in the month of January for the next press meet. Thank you so much.
Thank you, sir. Thank you, everyone, for joining this virtual press meet. Our team will be sharing the press release with you shortly. You can also reach out to me or anyone from AdFactors team in case you have any further queries. We are happy to help. This call now stands concluded. You may disconnect. Thank you.